From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 6, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. The news calendar for the first few days of this week is relatively quiet given what we saw on Friday. But we do have some events that could spur on some movement, and you'll want to make note of those on your financial calendar. Probably most importantly for the day today will be at 12:30 Eastern U.S. time. We have Fed Chair Yellen speaking. Now, of course, with last Friday's NFP, the significant miss that we had and the pullback, the sell-off of the U.S. dollar, it'll be interesting to hear what the Fed Chair has to say. Will there be some hawkish comments that point to continued decision-making about the June interest rate hike, or is it going to be poor comments, dovish comments that give some significance to the sell-off of the U.S. dollar, and we see further movement in that direction? So I think that will be very interesting to watch at 12:30 Eastern U.S. time today. And then going on before we get into tomorrow, 12:30 a.m. Eastern U.S. time, so just after the midnight Eastern U.S. time, we do have some news out of Australia with interest rate statements. So you'll want to pay attention to that if you are trading in the Australian pairs over the next 24 hours or so. Let's jump right into the charts and the currency pairs and see what's been going on. As mentioned, last Friday's NFP data did miss the mark quite significantly, and we saw a sell-off of the U.S. dollar, which, of course, basically changes the trend perspective for a short period of time. We've seen some significant pullbacks against some of the direction that we've been focusing in on. Here on the U.S. Franc, we had the downtrend channel between the red trend lines. You can see that here. Then it broke out over the past couple of weeks. It broke to the top side, giving some upside hope. We've been following the uptrend, the blue trend line on the right-hand side, the uptrend, the congestion zone in the black box. The market was stuck in the black box for a couple of weeks. And then last week's NFP just dropping it underneath there, changing the direction that the U.S. Franc was going in. Let's zoom it in a couple of times here on the daily, and you can really get a good handle on that. It rose. It was a pattern of a trend. Rise, congestion in the black box. That's what we were studying last week. And then NFP comes out, surprising the market and sending it back down again. Interesting here, this yellow shaded area right around the 97.50 to 45 level, now holding as our support, which is the top basically of that downward facing channel that we were looking at just a moment ago on the wide angle view. Support right now into the yellow shaded area. I think if you're going to go short and sell this currency pair, given the state of NFP last week, if you're going to go short, there's one of two things you need to look for. It either needs to pull back into resistance, that at least would be back closer towards the 9,800 level, or it would need to break down underneath this yellow shaded area and underneath likely the 55 to 20 level. That's the yellow zone. It will need to get underneath there if you're going to look for it to go lower. Of course, you follow it back in time, you know there's congestion, resistance. So this is a support zone that we're looking at right around the mid 9,700. So we need it to get through there before we can expect it to possibly move down to the next support zone, which is this blue shaded area down here into the 96.75 level. So if you're looking to go short, this is the spot that you're hesitating, you're waiting for it to either go back up or break through this barrier. If it can't do that, then it's possible we could look for some pullback here for the U.S. franc. So significant decision zone. I don't think this is a good time to sell it or go short. I think we need to wait for a pullback or a break through this barrier before we have an opportunity to go short again. 4-hour time frame's not really going to change that a lot. You see a little bit of a hesitation and pullback, but of course we have not seen anything significant to tell us that this is going to turn around and go back up in the other direction, but really being cautious about selling it at the bottom of what has been the run since last Friday here for the U.S. franc. Let's move it on over to the euro dollar. Just exactly the opposite. We've been studying the long-term trends perspective. Let's take a quick peek at the weekly. Of course, the downtrend from 2014, the range that we've been stuck in since January of 2015. The red box down here, we've been studying that a lot in the trade room. Take it down to the daily time frame. Of course, the long-term or mid-term or short-term perspectives on trend could be quite a bit different, where you can see the red trend line is an uptrend, and the falls, the black trend line and the blue trend line, where it went down to the red trend line. You can see both of those here on the daily time frame, and that's what we've been studying and trading, the downtrend and along the blue trend line. And of course, last week's NFP, quite a bit of a change here for this currency pair. Big blue candle as it pushed all the way up here into the 113s. Now, the blue shaded area on the chart, 113.70 to 113.55, is holding as your resistance. Of course, it will need to break through there if we're going to look for the continuation higher here for the euro dollar. If it can't, we may be looking for some short-term pullbacks, even back down to 113 would be a possibility. 113 would be a good target on the way back down, especially if you're looking for an opportunity to go long and buy this currency pair. I think 113, 113.20, the orange shaded area here, would be a great area to consider as a potential buying opportunity. Anything underneath that might even see a much further pullback of last week's run, all the way back down here into the mid to low 112s, the yellow shaded area. So some interesting things. Remember, buy low, sell high. If you're going to buy something, you want to buy it at a lower price. You don't want to buy it at the highest price possible. So buying at the blue zone just doesn't make logical sense. You want to pull back, likely back down towards as close as possible to 113 before you would look to go long again. The next thing you're looking for, 113.70, a break of that, likely looking for a turn back towards the low 114s, and then above there we could even see 115, the pink shaded area at the very top of the chart, challenged once again here for the euro dollar. Taking it on over to the GBP USD, here's some interesting things about this currency pair. We've been studying these two boxes, the black boxes you see here on the chart, the ranges that you see here on the chart. Last week's NFP move caused us to go up significantly, but guess what? This one has significantly retraced that. We've seen this push all the way back down and go underneath last Friday's low. So some differences here on the pound dollar, where we see the market completely reversing and going back underneath the Friday lows. So if that continues to push underneath, and we'll talk about 143.55, 14400, the blue shaded area, if it goes underneath there, I think we're looking for reversal for this pair to go back down. So that's interesting given the state of affairs from Friday. We'll have to watch, of course, the news about the Brexit. Of course, we'll have to watch what Fed Chair Yellen says today. But very interesting how we've seen a full reversal from last Friday's move here on the pound dollar. Let's take it down to the 4-hour time frame. I definitely want to focus in on that blue shaded area. That is your significant decision point. If you're going to trade this currency pair, between 144 and 143.55 is the spot to watch. You're looking at that as support right now, obviously. And if it can break underneath, we'll call it 143.55, 50, then we're likely looking for it to turn back down into the mid to low 142s. That's the green shaded area down here underneath our blue shaded area. If it turns around and goes back up, obviously your first area of resistance would be the orange shaded area right here. And let's go ahead and put a black area there. Orange shaded area 44.80, 45.15. So above the blue zone, as we're finding support, potential to go back up. Definitely watching Fed Chair Yellen today. Underneath the blue zone, may look for a complete reversal here for this pair to go back down. Interesting from that sell-off of the U.S. dollar. It's completely reversed it and gone back down. I definitely think that this could be an area that we're going to watch today for a potential opportunity to trade as a long for the GBP USD after Fed Chair Yellen. Let's talk about the USD CAD. Again, reversal of the trend pattern. It was moving up, the blue trend line, rising congestion zones. You can see the difference in pattern under the red trend line, above the blue trend line, and now we see it pushing underneath the black box and underneath the blue trend line. So for the day today, let's go ahead and zoom it in here. I think as long as it stays underneath the 129.65 level, the blue shaded area, you're looking for selling on rallies and bumping its head back into the resistance zone, 129.63, and targeting the next support level, which of course is the orange zone. You can see that back here where the black box is over here on the left-hand side. Blue zone resistance, orange zone support. If you're looking for an opportunity today, it's clear that you would more likely look to go short and sell this pair. Of course, we'd like to see the oil start to rise again for the inverse correlation. If oil breaks resistance, starts to rise, we likely look for this to go down. That's something that we'll watch. Of course, much later on this week, we have Canadian employment data, which could produce some volatility on this pair as well. But at least for the time being, given the sell-off and the fact that we're underneath 3,000, I think this produces a much better selling opportunity. Your risk in selling this pair is that it breaks back above 3,000. Your stop loss would be above 3,000 if you're going to sell this currency pair. So how do you make your risk smaller? Of course, you're going to sell on rallies into resistance. You're going to sell as close as possible that you can get to 3,000 and target back down here into the mid to upper 2800s, the orange shaded area. The risk, like I said, is a break back above the blue zone. Let's take it back down to the 4-hour time frame. Again, look at that. We've already done once. It's already done that once. It bumped its head into the 29.65 level or so, 70 level. You can see it's already done it once. Of course, that's the same thing we're going to look for again. We need it to make another bump up into there before heading back down to the orange shaded area here for the US CAD today. Taking it on over to the US yen, of course, a clear sell-off here for this currency pair as well. We challenged very close to the last lowest low, with the multi-year low that we see here for this currency pair down into the 106 mid to upper 105s down here at the very bottom. Let's just go ahead and zoom it in here. Take a look. There's your last low. Came very close, not all the way down there, by the way. So if you're looking to trade this pair, of course, buying on dips into support and clues and evidence of reversal is a possibility as long as it's above 106. But clearly a break of 106 in that purple shaded area, I think we're looking for a much more significant fall lower here for the US yen. So there is the possibility of support. We've seen it before, but be cautious about selling. That's really all I'm trying to say. Selling on rallies to resistance will produce lower risk. 107.35 to 107.65, the green shaded area at least will be your resistance for the day today. Anything above that green shaded area, 107.65, you could be looking for further reversal from last week's move. Take it down to the 4-hour time frame. We've already seen it bump its head into or close to that green shaded area once today. I think close as possible. If you're going to do it, close as possible. Let me zoom out one more time to that green shaded area. Look back here to the left where the blue circle is. You can see bumping its head just to the left of that blue circle, bumping its head into 107.35 into the green zone. I think that's what you're looking for today. Getting as close as possible to the green zone, going short towards the yellow zone, looking for the break of the 106 level and the continuation lower. All that means that you're also going to be watching at these multi-year lows for clues and evidence of support and reversal. That's what we saw back here. Significant fall, congestion between the green and yellow zone, eventually finding support, couldn't break lower, and reversing and going back up. That would be, at least this point, the break back above the green shaded area. Let's take it on over to the AUD, USD, Australian, US dollar. Again, reversal of trend. It was a downtrend, blue trend line, the pattern of the trend, all the congestion zones, the boxes that you see there. Let's go ahead and zoom it in. Like this, you can see the pattern, and that pattern has now been broken. Again, buying on dips into support could be an opportunity that you're going to watch for. Keep in mind, 12:30 a.m. Tuesday morning could be, depending on where you are on the globe. But it's 12:30 a.m. Eastern U.S. time. Interest rate news out of Australia could produce some significant volatility. But currently, support zone 73.35 down to 73.15 is the purple shaded area. If you're going to buy it in the direction of the current momentum that we began since Friday, that becomes your opportunity. 73.35, 73.15. Resistance 73.85, 74.15. That is the blue shaded area just above that. And you can see that back here where the red box is on the left-hand side of the chart as well. Above the blue zone goes higher, below the purple zone potentially turns around and goes back down for the Australian dollar. I think for the time being, we're going to focus in on the momentum from Friday, looking to take advantage of a little bit more of that, keeping in mind the interest rate news out of Australia later on today. Dipping into support will be the purple shaded area, 73.35.15, becomes an opportunity to go long. Take it down to the 4-hour time frame. We've already seen it do that once here. It's dipped down, found support, now going back up. If you're looking for low risk, remember your risk is the breakdown underneath the purple zone. So your stop loss, your risk would be underneath that purple shaded area, just like that little red line. So if that's your risk, your potential stop loss is underneath, let's say 7,300, a little bit underneath there. How do you make that risk smaller? How do you make your stop loss smaller than what it is now, close to 55 to 65 pips? Then you need it to go back down to the purple zone. So that's what you're going to watch for. A little bit of a dip, give you a lower risk, and higher potential reward, of course, is the blue shaded area at this point for the Australian dollar. And lastly, moving on over to the New Zealand dollar, similar situation. We've seen the reversal of the trend pattern that we were following. We were actually looking at this trend pattern right here, the fall that was happening over the past several days. Into last week, we saw the beginnings of the rise, the push above the pink zone, challenge of the yellow and blue zone here at the top of the black box, and then on Friday's NFP, just a breakthrough there and a challenge resistance highs. We've seen this before. Don't get too caught up in the rise. We've seen it find resistance here before. If it's going to go up, we need it to do one of two things to give us an opportunity. It needs to go down for a buying opportunity or break through the orange shaded area for a buying opportunity. I think those will become our best opportunities, dipping to support or breaking through resistance. Resistance right now right around basically the 7,000 level. It needs to get above 7,000 if you're going to look for it to go higher. And it's so far been unable to do that. Underneath 7,000 and as close as possible to it is your resistance. So it needs to go down before it goes up. Interesting, this little area right here, 69 to 69.15. We're finding a little bit of support there today, and you can see some congestion and resistance right in here. Let's take it on down to the 4-hour time frame. If I was going to bring in a little bit of a smaller time frame highlighted shaded area, I might look right here into this area, 6,900 to 69.15. Let's go ahead and bring a black line in here like this. So we're looking right around 6,900, 6,915, this purple shaded area. Now we know that the main area is down here at this blue zone, but this is a very interesting area as well. So as long as it stays above 6,900, you might find some intraday bounces off of there. Your risk, of course, if you decide to buy it here, is going to be underneath the purple shaded area because you don't want to stay in it too long. If it breaks 6,900, then you're likely back down towards the mid to low 68. So interesting area here. If you're looking for a little bit of a more aggressive move here into 6,900, may become an opportunity to target back towards 7,000. Above 7,000, of course, you'll look for it to go higher for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.